And good afternoon, everybody. Welcome, welcome, welcome to another edition of the Crest Report, your top-notch gold, silver, palladium, and platinum news of the day. And man, is there a lot to talk about. Every week it seems like, who would have ever thought that the precious metals daily news would be as interesting as it is here in 2026. So without further ado, before I say anything to anybody in the audience, let me introduce to you the man that started the show, the reason why we're all here, the person that brings us all the information of what's going on around the world, Mr. Rich Jacoby of Golden Crest Metals. Rich, happy Saturday. How you doing, buddy?
Good. How you doing?
Doing very well. What a week, huh? What a month.
Yeah. What a month.
What a
What a
month.
year.
Yeah, what a year. Yeah, I mean, I guess you could go all the way back to last year just to see the craziness. I mean, for the longest time, it seemed like, gold and silver were always going up, but there wasn't like the news, the headlines that it's been grabbing over the last, 16 to 18 months. And, when it's making daily news headlines, then it's something worth talking about. And that's what it's been doing. It's been getting out of the financial world, and it's been creeping into news headlines for the last 16 months.
Yeah, exactly. I mean, we've seen a lot of momentum in the last 12 months and continue to see it.
Before we get started, I do want to say hello to everybody that's watching live. Thank you for being here on this Saturday. We know that your time is precious, but the people that are spending their time to watch this show weekly, obviously to them, their diversity in their financial portfolio is also precious, is also valuable. And we get a lot of questions. We get a lot of people that tune in every week because they've become what I've become. They've become a person who has an investment into precious metals because of the trend that we've seen really over the last 2 years, but highlighting the last 16 months. And Rich and I were just talking before the show, year over year, year to date. Well, not year over year, but just year to date this year alone. Gold is up 17%, Rich. Silver, regardless of the ups and downs and the craziness, is still up almost 10%. So, I mean, really, really great investment if you're looking at it for an investment purpose alone. Just look at the last 2 years. I mean, a lot of people use it or buy it for security, but now it's become an investment tool. And as we've talked about over the last few weeks, financial advisors are starting to turn their head this way because where else are you getting, in less than 2 full months, a 10 and a 17% increase on your investment?
Yeah, in just that short period of time, even with all the volatility that's going on, we're still making gains.
Yeah, really,
I
really
mean,
incredible.
I mean, even with we talk about the debt. The debt I think is exceeding $38 trillion, but gold and silver are still holding in a positive direction. So I think that there's a lot of doubters out there, but there's still people forecasting. Morgan Stanley, Goldman Sachs, and B of A that are saying silver is going to hit $300 an ounce by year end, and I think gold was going to hit about $6,300 by the end of the year as well. So everyone's still talking in a positive direction, and it's holding its own. It's dipped because there were some sell-offs, which is natural to happen, but it will rebound.
I want to also look at some other trends real quick because there are people that do invest in palladium and platinum as well, with rare earths or with rare metals. And that's what I would call every precious metal. That's why I call it precious. I think it's rare because it's becoming rare, right? Like gold is already rare, if you ask me. But like palladiums and platinums and silver, they're going to become more rare as we need them. But looking even at palladium futures, Rich, year to date, up 2.5%. And then looking at platinum year to date, you're actually down, but you're only down 2.72% year to date. But if you go back to last year, it went up so much that, you know what I mean, going down 2% this year isn't really that big of a deal. But you can even forecast. I mean, you can go, not forecast, you can go back, folks, on your own. Do this periodically if you want. But over the last 5 years, Rich, silver, 5 years, long term. You're always talking about long term. If you look at
Right.
silver over the last 5 years, Rich, it's a 183% increase. 183% in 5 years. And I wouldn't even call 5 years long term. But look what you get in, even just in a cumulative 5 years. 183% return.
Yeah, and I tell people, where else are you going to get that kind of return?
I,
It's with less volatility. I mean, sure, you can probably find a stock somewhere that you hit pay dirt on, but this is something that's been proven over time and time again that it's always been in this trajectory where it's going up. So I think people are realizing that, and we've probably been the busiest in the last 2 months ever because of people buying on the dip. They're taking advantage of the dip right now.
Gold over the last 5 years, Rich, 71.5% increase. So again, folks, you're talking, almost tripling your money on silver and in the last 5 years, and almost doubling your money in gold over the last 5 years. So if that continues, which everybody's forecasting that it will, you're talking a 5 year investment. You're probably going to see something very similar or that mirrors that, maybe even surpasses that. Rich, another thing I want to talk about, since this is an educational show, there have been a lot of gold companies out there, precious metal companies, not just gold, but precious metal companies that have overpromised and underdelivered. And there's a bad taste in a lot of people's mouths because of other precious metal companies out there, and they are abundant these days. As a person who's heard some of these horror stories, and as a person who's tried to, not actually walk people off the ledge, but there's a lot of people who have a bad taste in their mouth from some of these other companies, and I know some of them. Like, what do you say to that as a whole? Like, you must hear stories a lot.
Yeah, I mean, we had a story, from another gold company that didn't purchase the metals for an individual, and they tried to transfer the metals to us because they wanted to change their position, and they thought they had X amount of dollars in their account. Well, when we looked into it, the metals were never purchased. Um, so you're talking about a guy who's around 80 years old. He doesn't have any retirement left. This was all of it, and it's just gone. And this same company did something else too, where um, it was a similar situation. And what we try to do is we try to help these people out to try to reposition them when they do have their metals. Hopefully they've been purchased, but a lot of times we're finding out they're not. So we're trying to do additional discounts to help ease people into situations where they can gain. And one of the things, excuse me, that I've come up with in the last week or so is a lot of people that are in stocks, and like, let's say, I had a client who was in Nvidia, and he's like, as soon as it hits $200 a share, I'll go ahead and sell and get a precious metals. And currently it was at 190. I said, I'll tell you what, to help you out, I'll cover the $10 difference. And that way you can move into precious metals. And we just take a thinner margin on it. So he seemed to really like that. And I've done that with other people with other positions that are in ETFs that need to meet a certain number, and we cover the difference as opposed to the 10% promotion that we offer. So
Yeah.
that's something else I came up with creatively, because we were getting a lot of feedback because of what's going on in the stock market, that they weren't hitting the right number for a sell order. So we're trying to help cover that gap. But like you said, going back to the other gold companies, they're popping up every day. I hear about a new one almost hourly, and what they're promising. And I don't like disparaging the competition because I believe everyone's entitled to make a fair living, but I don't like it when people are taken advantage of, especially the older community who have no money left and they put everything into it and they find out they have nothing. And then they try calling the company and they don't answer the phones. They don't answer emails. They've totally gone off the grid.
How does somebody, okay, well, let's do it two ways. In your opinion, how does somebody hold that company accountable? Who do they get a hold of in order to, make that complaint? And then B, on the flip side of that, how are they sure that if I send Golden Crest medals, you know, half of my retirement or some of my money to invest in golden metals, how are they to be sure that they're not going to get the same runaround and the same screw job as the last time? So I guess that's a two-part question. How do they try to get it back? And then how do they ensure that the next time that they go to invest, it doesn't happen again?
So the best thing that I tell people is go on the internet, check the reviews, um, drill down into them. There's a number of different review web. You have Google reviews, TrustPilot, Better Business Bureau. Look at all of them and see what people are saying about them. If you looked at this one particular company I brought up, I mean, you can see people are bringing class action lawsuits against them.
Mm-hmm.
That should have been a sign, or people saying they didn't get their medals, or um, they never got a call back. So the best thing to do is to really do your research. And I
Mm-hmm.
tell people, look at our reviews, do research on us and everything else. Even though we've been around a short period of time compared to some of the bigger competition out there that, been around for 20 years or something of that nature. We have all positive reviews. It's pretty hard to do that in kind of a consumer-based business, because you're
Yeah.
always going to have an unhappy person or an unhappy client because that's just how it is these days. I mean, you can't make everyone happy. So far, I think we've done a pretty good job with it, but you have to do your research. Do
Yeah.
not buy because you see an ad. Go to the internet, check them out, see if they other people are making positive comments about them.
Yeah, that's that. I mean, I guess that's good advice for life, and any kind of consumer advice is definitely today. You have the world at your fingertips. Um, it's very. I know it's very difficult for somebody in their 60s, 70s, and 80s to just know all of these sites to go look up, but especially with voice, talk to text, and with AI these days, simple search engines should be able to bring up an entire portfolio of these people of anybody's business, and then you can go and check out the reviews. Very important to check out reviews. I know a lot of times people say, well, reviews can be bought, they can be faked. I think you, I think the
It's weird. You really can't do that these days.
That's what I
There's
was
an
just gonna say.
algorithm.
I think
Yeah.
they've got that under control. I think that that is constantly looked after and looked over, and bots are being detected constantly lately, especially for reviews, Rich, because that can make or break somebody's entire business. I mean, that's definitely a national security risk if you're breaking the bank of people's businesses in somebody's country.
Yeah, and I think what happens is now with this new algorithm that Google has and Yahoo, um, if you get detected doing buying reviews, you can get blacklisted and it can cause a lot of problems. So,
Yeah,
those websites that, promote like, oh, we'll give you 100 reviews a day. I mean, when you see that, that's a red flag. I mean, that's an automatic red flag if you start seeing like, 20 reviews in one day and they're all positive and right after a negative review.
yeah,
So they try to push down the negative reviews with positive reviews so you don't scroll down. So there's all types of tricks of the trade, but the problem is the older demographic that we're dealing with, we send things through DocuSign and they can't figure out, they don't have a computer, or they can't figure out DocuSign. So we actually have to FedEx invoices and documents to them to sign and then send a carrier to pick it up and drop it off at FedEx because they're just, they can't get out of the house, they may have a disability, physically. Um, So there's those type of things you're dealing with. So they're not on the internet checking, reviews and everything. You may get a smooth talker on the phone that talks them into stuff, and that's what's been happening.
Mm,
Is they get a smooth
sales and marketing.
talker,
Yeah.
and that smooth talker gets them, in deep water, and they don't get what they're supposed to get.
Yeah, it's real. I've heard a couple stories, even with gold companies that I've been involved, even with precious metals companies that I've bought from. I hear about it later on down the road with somebody, and I'm like, so yeah, you do definitely have to do your due diligence. I do want to go back to something, Rich. I did misspeak. When I said gold was only up 77% over the last 5 years, that was wrong. I accidentally had it clicked on the 1 year. Over 5 years, gold is up 177%. So where silver was up 180 something percent over 5 years, gold also is up 177%. So that means 5 years ago, gold was at 3,000, $229 at one point. It's looking like, and silver as well, the same thing. So if you kind of match that, folks, with what you can expect, I think gold was actually cheaper than that. Maybe I'm reading that wrong, but I am reading the up 100. So silver's 182 and gold is 177. So,
I'm actually going to look it up myself too, because
yeah.
I look at this, not every couple hours, but I try to stay diligent with it. If I look at silver and I look at the 5 year run on it, we're up 338% in 5 years.
So,
That's in 5 years. In 1 year, we're up 160%.
wow. What about
Yeah.
gold?
And gold in a 5 year term is up
So
219%.
so this is off here where I'm looking at. Wow.
Yeah. And then 1 year, it's up 88%.
Wow.
It's up $2,300 in 1 year.
So it's even better than what I'm showing here. Wonder why that's showing that. Well, I'll figure that out later on. I'm looking at market
Yeah.
summary, but either way, if what I said is on the low end and what Rich is getting is on the high end, it's still you're not getting that kind of a return anywhere else. Well, I'm glad we had that talk about other companies without mentioning names,
Of course.
but at the same time, it is something that people do have on their minds. It is something that people have thought about. So, okay, and had gripes about too and questions as well. All right, so let's get to the debt. We talked about this before the show. Over $38
Right.
trillion dollars in debt, and of that $38 trillion dollars plus that we're in debt, the U.S. federal government right now is spending $2.6 billion dollars a day on interest payments for that national debt. So $2.6 billion dollars a day the United States is just giving away. Okay? Now, I hear a lot of people in the news side of things, Rich, all week long. You wouldn't even believe it. We need to stop giving this person money, and we need to stop giving that person money, and we need to stop funding this, and we need to stop funding this. It's atrocious, and people fight over it, and they get divided over it. And we're talking maybe $5 billion for most of these conversations, $2 to $5 billion for aid or for whatever partnership we have with somebody. But this is $2.6 billion a day, and I don't see people out there on the streets, Rich, protesting the national debt. And that comes out to be $78 to $80 billion every single month. $78 to $80 billion. So in a world that crazy and with a dollar that invaluable, what do you say to that as far as somebody that's been doing this for as long as you've done it? You've seen the debt just climb crazy every year, I'm sure.
Yeah, I mean, more borrowing leads to higher interest costs, which then require more borrowing. Markets can tolerate large debt levels, but then they struggle with accelerating debt levels. This is structural pressure, not short-term volatility.
Mm.
So, just with the more borrowing that's happening these days, because, people are cash poor in some degrees, you're dealing with credit card debt. You're dealing with a lot of debt out there, and with the interest costs and everything else, it's not helping.
And when we borrow, we are borrowing cash, not precious metals, which is
Correct.
why the value of the dollar goes down every single time we add to our national debt. And that's why gold and silver continues to rise because A, you can't print more, and B, that's not what we're borrowing. So the U.S. national debt now exceeds $38 trillion. And I guess the main talking point here is, Rich, this week's development, last week's development, isn't so much of a price swing as it is just straight out math, right?
Yeah, I mean that's really what it boils down to is it's math. It's objective. It's not something, emotional or anything like that. I mean, you just look at the numbers and then see where we're at, and you can, like you said, you can always print more money, but you can't make more gold and silver. That you find it, but there's only so much of it.
Rich, do you know in your study and research, like, where are these gold, silver, and precious metal mines mostly in the world? Like, what country can lay claim to, we're exploring and finding the most gold in this region of the world? Like, because you just don't hear about that these days. The last time you really heard about anything like that was cobalt mines or the gold rush of the 1800s. So like, where is this coming from for the everyday average person that wants to know? You know,
Well, I think China's making a big news, as far as they're finding gold, in various places, but they're not exporting any. So you never know what's coming out of China if it's true or not. So that's the other thing too. So they're saying they found billions of dollars worth of gold, that they're going to mine it and refine it and do everything with it to put it in the market, but not in our market right now, which I think is strategic. If they indeed they do have the gold, or they're just putting it out there.
manipulating the market.
Like, exactly. And we've
Because
seen them do that in the past.
because the market does respond to that, right? I mean, the market does respond. If China says, or anybody, but I know the market probably overlooks, looks at China a couple times, gives them a double look. But if China says we found $1 trillion worth of gold, how does that impact the market? Hold on, if they say they find $1 trillion worth of gold, but they don't put it out there in the markets and they don't export it, how does it affect the market at all, just them by saying it?
Yeah, I think so. I mean, it's the consumer confidence level that goes down to say, well, they're not going to export the gold they found. They're going to keep it, and they found this much of it. And now, how does that affect my pricing? Does that mean because there's now less gold in what we can make ourselves available to, that it's going to skyrocket even more? There's a lot of questions out there how they manipulate the market, and they purposely do it.
But so as just an everyday person, an average consumer, like my question would be, and I'm sure that people that are watching right now in the live chat question would be, is how can the market react just by like I could say Bigfoot's real, right? How do they not have to produce on some level that they actually have a claim here, that they actually have some truth behind
Proof.
their claim, proof? Yeah.
Uh, As you've seen, I don't think you have to produce the proof. If you got somebody in power making a
Wow.
statement, you can see somebody run with it. I mean, I'm pro-Trump, but if Trump says something, people react. The stock
Right.
market reacts.
Right.
He doesn't have to provide the proof. He just makes
That's
the
true.
statement, and people take it as gospel and say, "Oh my God, what do I do?"
Yeah. Well,
Um,
I guess my mistake here is thinking that because the precious metal market is actual physical, tangible something as opposed to the dollar and the stock market, which is we can just print what we want and borrow against future generations. I guess my thought process goes because one is supposed to be real and tangible, that there should be some kind of a, evidence or proof as opposed to the other, which can be printed out of thin air.
Yeah, I mean, I think it's like anything. I mean, you can say something and not provide the proof, and people still believe it.
Yeah.
I
Yeah.
mean,
That's why rumors are
it's
so
kind of
bad.
like it's kind of like Area 51. I mean, there's no proof except what people say, or if you followed that Bob Lazar guy, he makes all these statements and everything else, but where's the proof?
Yeah.
But people believe it. So, um, you don't necessarily have to have proof for the market to react. You just have
Mm.
to get an audience.
Yeah, that's a very good statement, actually. So, all this talk on China and this foreign demand on treasuries. So, I'm looking at the Market Watch here. Market Watch story says China told banks to scale back U.S. debt exposure. And then looking at Bloomberg, it says treasuries fall as China banks asked to limit exposure. So, kind of break that down for us here. With China banks looking to scale back U.S. debt exposure, like, what are they doing here?
Well, I don't think it was framed as retaliation. It was framed as risk management, and the distinction kind of matters. I mean, when major buyers stop expanding exposure, even without large scaling or selling, demand support weakens.
Mm.
So you have treasury yields moved higher and the dollar softening following the report. So funding U.S. deficits is no longer automatic, it's increasingly selective. So I think you have to look at those points in order to make sense of this.
So you're
You
saying
know,
that what they're doing here might not be as just a political or an economic retaliatory choice here. It may be their own assessment of their risk management of the debt and of those precious metals.
yes,
Oh, okay.
exactly. Like I said, I think it's risk management on their part, and I think that's what they're doing.
Well, if anybody has some risk management, it's China, because if China every couple years, few years, something of China's gets exposed. It's like a lie, right? You can only
Hmm.
tell a lie so many times before you forget the actual lie, and now you're lying on top of a lie, and sooner or later you get caught up in it because enough people go, "Wait a minute, that's not what you told me." And then everybody knows that you're the liar. And it seems to happen with China politically. Like, I know that when I'm reporting on China, from a politics point of view, which the economy and global economics is all in that. It seems like they get caught up every few years in some big lie that they told, but then it kind of goes away. You know what I mean? Like, their market gets exposed for a minute, it crashes, but then it's almost like their stranglehold or monopoly on manufacturing or something, or their threats to the rest of the world that they will tank the rest of the world's economy, kind of just makes everybody go, okay, well, that was exposed and they lied, but no biggie, and we'll just go back to business as usual. I mean, am I like am I in left field here with that, or does that make sense?
No, it totally makes sense. I mean, a lot of people don't know about me is I actually worked for a developer that was state owned out of China, and they were regulated by the People's Republic of China, or the PRC. And when they entered the US market, it was kind of like compartmentalized, and they compartmentalized a lot of things about what would be released to us. I was, I think, one of the only Americans working for the domestic operation. I think there were a couple other people, but I was the main point person. And a lot of the information I would get didn't seem right, or it seemed misdirected. So
Mm.
I'm not saying that China is all bad, but I think their approach to things is like I said before, risk management. They want to look at things. Um, and sometimes it works and sometimes it backfires. And I think for the most part, it backfires.
Well, I think it's more of like a control thing. Like, they're not used to a true republic or a democracy in any way of
Yeah.
shape or form. The way they do business is strong arming and threatening with respect. They respectfully threaten their opponents, and they control everything. And I think that kind of just dominoes down to everything that they do, even when it comes to global anything, any companies they own, any businesses they're involved in. Like, I very rarely meet people that say that they had a great working relationship with a Chinese owned company. And, I used to be in, high level sales, marketing, advertising, IT stuff. And I met a lot of people who worked for companies that had a large ownership of that company was with Chinese companies. And they all tell you, it's like your I's are dotted, your T's are crossed, and everything is perfect. It's almost like the military.
It's interesting because, yeah, I mean, we were kind of in maybe similar fields, and I'd be in meetings and everyone would be speaking Chinese. I'd have no idea what was going on or being said. And, after the meeting, I'd have to go, to, the COO and say, what was discussed?
Yeah.
I'm out of the loop.
Yeah.
So, and I know I wasn't getting the absolute truth. I was getting bits and pieces.
Yeah.
So, you know, it's a different culture and how they do things than how we do it. We're very transparent, and how we, explain things and we communicate. But a lot of their culture is through kind of misdirection,
Yeah,
and I'm
and deceit too. A lot of that, and I'm not trying to say that in a, like to demonize an entire country, because the people of China are like us, right? They want to make a good living, they want freedom and everything, but the government of China is just the way it makes people live their lives over there. It is very militaristic, and maybe that's why they don't have an epidemic in diabetes. Maybe they don't have but
yeah.
they do have a manipulated currency, and they do slave labor, and when they want to affect markets like the gold and silver market, they will. And if they have to say we found billions and billions of dollars of gold and we don't have to produce it, that will affect the market. And then you know what they do when the market goes down? They go buy it all up. That's what they do.
Yeah,
That's
exactly.
exactly what they do. Well, let's get into the bond conversation here.
Sure.
Switching gears here. The hidden support under bonds is fading. So, two stories here: Schwab and Market Watch. The top story there with Market Watch on the bond side of things, from that Bank of America flags a really big risk, is in the headline. Bank of America flags a really big risk to bonds and then the stock market. And then Schwab says, what could go wrong in the bond market in 2026? So walk us through the whole bond scenario and this hidden support that might be fading in the bond market.
So I think for years, equities indirectly supported treasuries. When stocks rallied, institutions rebalanced into bonds. Um, that mechanical flow absorbed heavy debt issuance. If stocks stall or weaken gradually, those rebalances flow slowly. So without that automatic demand, bond markets behave differently.
Mm.
So when bonds stop cushioning equities, portfolios feel the shift.
And so with people who have invested, this bond market, with people invested into the stock or gold market, since it's really weird. Like, I always thought that all markets were connected, and I think they are, obviously, in some way, shape, or form. But then sometimes you'll see one market, like the stock market, and the dollar tank, and you'll see gold and silver rise, or vice versa. So how does the bond market play into that role? Because bonds are usually, I mean, when I think bonds, I think larger. I don't think individual. I think larger.
Right.
I think of corporations and countries as opposed to like individual investors. So can you kind of run through the audience kind of what we're talking about here?
Well, I think mostly, like I said, it's for years the equities were indirectly, supporting these treasuries. So now that, we're kind of switching gears a little bit, that's why you're seeing this effect right now,
Yeah.
and we're rebalancing into bonds.
I wonder how much, what my question is? I wonder how much that the U.S. Treasury, um, I wonder how much involved they are, more than what these headlines tell us, in gold and silver. And I guess that would always come back to the age-old question is, do we have the amount of gold that we say we have? And I always hear that question, but I never hear anything about the U.S.'s silver stockpile or their platinum palladium stockpile or their cobalt stockpile. Like, I never hear about them. I just hear Fort Knox has gold, but yet we never get an audit. We don't know if it does. I don't even really care if it's in Fort Knox. I would just, as a consumer, I would like to know if the United States has that much gold or not. And we never talk about it. We never talk about the silver and all of the other precious metals that might be obtained or sold or bought from the U.S. Treasury. It just doesn't seem to be a headline topic.
No, it seems to be a mystery. Like you said, we always talk about gold, but silver, platinum, and palladium, and even copper, you really never hear anything about it. Like,
Yeah.
what is the reserve in silver? We don't know.
I'm going to
We
ask
just know
that.
we need it.
I'm going to ask that. How much is the silver? How much silver reserve does the U.S. have? It's the second thing that came up. Here's what it says. The United States, and I would think because we are a constitutional republic, before I read this, I would think that there got to be some kind of a public information out there that we can have access to that gives us this, the news of what our government is buying up or keeping in reserves. But it says here the United States holds approximately 23,000 metric tons of silver reserves, ranking among the top 8 nations globally as of 2026 due to the surging industrial demand for solar and electric vehicles. Silver has been classified as a critical mineral in the U.S., with forecasts indicating significant supply shortages.
Yeah.
Wow.
I mean, 23,000 metric tons it's a lot, but it's not, I don't think it's enough to support what we need.
It said that getting into the key details of regarding the U.S. silver reserves, it says the reserves volume, the U.S. Geological Survey, and other reports place U.S. silver reserves at 23,000 metric tons. The U.S. produced 1,100 tons of silver in 2024, representing about 4.4% of the global production, with Alaska and Idaho as the leading states. And over 2/3 of U.S. silver is produced as a byproduct of mining for other metals like copper, lead, and zinc. So, kind of found on accident. I mean, really.
Yeah. And what are you going to do when we run out of silver? I mean, if we
Yeah.
have 23,000 metric, we have to open up the trades with other countries, to keep this flow going.
Yeah. And
So,
go ahead. Go ahead.
oh no, that's why I was going to say that's why these forecasts that are coming out, are saying, silver's going to be $300, and because it's going to be required, and there's only so much of it left. Like you said, 23,000 metric tons to the end of the world. I mean, unless we find more of it,
Yeah.
is not a lot.
Well, and we're not producing. I mean, we have 23,000, right? Well, in 2024, we only produced 1,100. So it's not like, basically what we're saying here, folks, for everybody who's watching, is that we are not mining more than we're consuming. So that or that we plan on consuming with all of the, the technology. Let me just get back into the technology real quick here. There is some strategic concern coming from the U.S. government here. The Treasury Department says due to supply concerns for green technologies, 25 and 26 developments include classifying silver as a critical mineral to strengthen domestic supply chains, and Hecla, Hecla Mining Company, is a major producer responsible for roughly 37% of the United States' silver production. And while the U.S. Treasury historically held large quantities, recent focus on the industrial supply, this tech boom that we're seeing, and COMEX approved warehouse inventories, which are making us experience heavy declines. So everything that we're seeing in the market right now, folks, the ups, the downs, but ultimately the ups always, is a lot of that is based on, well, we're holding our stuff close to our chest. Well, we're holding our stuff close to our chest. Well, all this stuff is coming out. The forecast of silver says that we're not going to have that much, or the forecast of gold says we're not going to have as much as we need. And then China comes out and says, oh, we found billions and billions of dollars. All of this is just that. But when the rubber meets the road, Rich, and that 23,000 metric tons that runs out, and it will, based on how much we're using and how much we're producing anyway yearly, when the rubber meets the road, that's when you're going to see a doubling in price, probably a massive spike. It's not going to be gradual. It's going to be like, oh, I went to bed happy, I woke up rich, right?
Yeah, probably.
When the 23,000 metric tons is gone, what do? I would imagine that the United States obviously would try to, like you said, open up some kind of an agreement with other countries in order to, acquire some of their silver. But you're right, 23,000 metric tons. It sounds like a lot until you look at, 10 years down the road and the technology we plan on producing and inventing, especially hospital equipment alone.
Yeah.
I
mean, just with everything. I mean, all the AI that people are using now, and the solar panels, every car that I see now is an electric car in some degree. It's not just Tesla. I mean, it's just, I think it's going to be used up very quickly, and we're just going to have to keep mining and looking for more. But at the same time, silver's going to go up.
Well, let me just tell you this. Look at this real quick, Rich. Mexico is the world's largest producer of silver. Mexico. Wow. Producing an estimated 6,400 metric tons annually. That is 5 times what we produce here in the United States, guys. The country accounts for a significant portion of global output, driven by major mines like Pensacola and Fresnillo, but also China and Peru come next. China is producing 3,300 metric tons annually, Rich, and Peru is producing 3,200, so just right behind them. And then you have other places like Bolivia and Poland, Chile and Russia, but they're producing what we're producing, 1,200, 1,100. So, hey, Mexico, maybe we want to talk. Maybe,
maybe this isn't the best time though.
Mexico, maybe we leave a door in the wall. A big, beautiful door, Rich. Maybe we leave a big, beautiful door that swings only one way.
Yeah, that's it. And you can only fit gold and silver through.
It's like a little chuck hole, like prison, right?
That's it.
Hey, Mexico. Claudia, I think that's her name, Claudio Schaumbaum or whatever. Maybe we want to talk. Well, let's get into the projections here. JP Morgan, 6,300 by year end. Gold. New York Post says that JP Morgan forecasts 6,300 for a price of gold, despite the sharpest fall since the 1980s. Which again, as I think is just a lot of this, Rich. I really do. But not only just this causing people to sell off, trying to get some quick profits real quick, not hanging on. But you see what happens when you hang on. Rich just gave you the numbers, 300% and 200% in 5 years. So volatility. That's obviously the center point of this one right here, Rich.
Yeah, I was actually looking at my report right now, and you're right. I mean, this is, God, it's amazing what's happening. It's with the projections still going out, and I'm looking at it right now. Like you said, JP Morgan, they reiterated, they didn't reduce. They're going to 6,300 forecast for 2026. JP Morgan expects roughly about 800 tons of central bank gold purchases this year. this isn't speculation. This is actually a forecast. And with silver, I had some notes on it as well, is that even though silver eased from the mid 80s to the mid 70s after reports of the Russian dollar normalization, the move cooled geopolitical premium but did not break structural drivers. So they're still saying that silver is $300.
Wow.
So that's a projection through the end of the year. So and that's coming from B of A, and they're modeling it.
Yeah, I think their exact price is 309, right?
Yeah,
309.
309.
309 for silver at the end of 2026. Which would put us where? So we're where? We're now about around the 80s. We got
We're
up to,
about the 80s right now.
and that's normal. The 120 was not normal. You and I woke up, we were like, what the heck is happening? Like,
Yeah, everyone went into a sell-off frenzy, and which, that's fine. It drove the price down because of the sell-offs.
well, and it just drove us back down to where we should be, 80s or 90s. I mean, that's where we expected. I mean, we hit that 90, but even 90 for the second month of the year would have been, if we never got to that 120, Rich, then we'd be sitting here going, I cannot believe how much it's up. You know what I mean? It's
Yeah.
just that one week, that 1 7-day period where it went up. And again, that's why Rich encourages you guys to look year over year or year to date or 5 year, or just look at the longevity of it. But so we're sitting at about around 80. It goes up to 300, Rich. Those people who bought it at 50, 60, 70, 80 will be feeling like I feel right now buying it at 22 when I bought it. And I know people who bought it at 8. So they're probably jumping for joy right now. But 309, what an investment. What a turnaround that you could have.
Yeah.
And again, you could at that point you could decide, people, you know what? I'm going to cash out here and I'm going to invest a little bit back in, but I'm going to take profits. Well, you can do whatever you want. That's a good thing about it. But the long game, if it goes to 309, then you're probably never going to see it at $80 again, Rich. If it goes to 309.
If it goes to 309, and we're not talking about 10 years down the road, 5 years down the road. They're saying by the end of the year.
This year. 10
Yeah,
months
I
left,
mean,
Rich.
I know.
10 months. Like,
And that's why when people say, "Oh, 309, it'll be, in a couple of years," they're saying this year, which is it's just amazing. And I thought they would have changed their projections, based on that dip, but they're saying no, they're actually going higher. So
wow.
goes to show you.
Well, now let's do the flip side of things here, Rich. Let's look at the world's largest gold producer. And I've looked this up in 3 different places now just to kind of back it up. And it says China. It says China is the world's, again, I'd love to see it, but I guess if I am demanding to see China's gold, then I better sure as hell damn man to see our gold as well.
Yeah.
China is the world's largest gold producing country, a position that it has held for over a decade, with an estimated production of 380 metric tons in 2024. Now remember, folks, when we were talking about silver, the least was 1,100. The most was 6,000. Gold, at its highest production in the world, is only 380. But that's because it's so much more rare than silver. But it accounts for approximately 10 to 11% of global mine production, utilizing state-owned companies to dominate the industry. Now, below them, Rich, Australia, Canada, and then the United States. So again, hey, Canada, maybe you do want to become the 51st state. Maybe Mexico wants to become the 52nd state, huh? Come on, I'm sure we could work something out. If we did that, though, Rich, imagine if we acquired the entire Western Hemisphere like the Monroe Doctrine and like Trump is looking at, we would be the world's largest producer in everything, always, for the end of time.
Yeah.
I mean,
yeah, exactly.
I'm not saying we should invade countries to take their wealth, ladies and
Just
gentlemen.
dominate everything.
I'm not talking about being a colonizer here. I'm talking about being a unifier. I'm talking about making it so we don't have wars and that we're all the same. But again, if think about that, if China does 380, right? We do 158, and Canada does 202. As far as gold goes, I'm not sure what Mexico does, but it probably does, pretty decent numbers as well. But we would need to acquire Canada and Mexico just to match China's gold output.
Yeah.
So that's pretty incredible. That's pretty incredible. So what's the difference between a ton and a metric ton? I'm not a math major. You're gonna have to help me out here.
So I always view it as a ton. A metric ton is a little bit different because I'm not from Canada. So I just always view things as a ton,
I'm gonna
you know.
I'm gonna see what the old interweb tells me. What's the difference between
Yeah.
a ton and a metric ton? It's probably gonna say nothing. Where you live. Okay, here we go. A metric ton is a unit of mass equal to 1,000 kilograms. Okay, blah blah blah. We don't care about that. Key takeaway: metric tons are used everywhere except the United States, where short ton
Yeah.
is common, but a ton is a ton. Right?
Yeah,
It's like what's heavier, a ton of bricks or a ton of feathers? Neither. Right? A ton's a ton.
that's probably why I've never researched it.
It's kind
You
of a
know?
it's kind of a obvious, right?
Yeah.
So let me get into these talking points here as far as the predictions, right?
Mhm.
Silver eased from the mid $80 to the mid $70 after the reports of the Russian dollar normalization. So I didn't politically on my political show, excuse me, I get into the global economy all the time. I didn't even know there was a Russian dollar spike or anything. Like I just didn't even hear about that. It never hit news headlines. So I had no idea that was involved in this, silver price.
Yeah, it's actually interesting. This got brought up to me by one of my marketing team members about the Russian normalization, and because I wasn't privy to it up until we started talking about it in the last week or so. So I was kind of in the same boat you were in.
Yeah, weird, but it does reinforce what we just said is that silver remains up double digits in 2026, but over year, not year to date, but year over year, meaning February of last year to February of this year, Rich, 140%. I mean, and if it goes up to 309, that even blows that 140% out the water. I mean,
Yeah.
silver is continuing. Precious metals in totality are continuing to hit records, and despite the up and down dips of 45 days, take it to the bank, folks. They're going to keep going up. It's impossible for them not to, with everything that we just discussed with technology and stuff. And that's why Elon Musk wants its own silver mines, right?
There you go.
I think we got time enough here to break down a couple other headlines here. Gold replacing treasuries. Bloomberg says institutional investors are revisiting gold allocation. And this is where we start talking about hedge fund companies and stuff like that. You and I think you mainly, I think you were ahead of the curve on this one. I think you were saying back 7 weeks ago that the market was going to start to pivot to where financial advisors start turning their heads toward gold and silver because they will be forced to sooner or later. Is that what's happening?
Yeah, that's exactly what's happening. I mean, you can see it. I've seen it in the last couple of weeks.
So
This.
Go ahead.
Oh no, go for it.
Well, I was just going to say, it seems to me like we're going to start hearing anybody who's got a financial advisor out there. I know that one thing I've learned in this business is you never know who's watching or listening. So if you're watching and listening and you do have a financial advisor out there, I would like you to do some homework for us. Bring up, if you haven't, which if you're watching this show, you probably have, but bring up to them the idea of diversifying into precious metals. Because I am curious what they're going to say today. And if they shut you down today, do me a favor. Ask them in 6 months and see what their answer is
They'll
then.
they'll still shoot it down. They've been shooting it down since I've been in the business.
Yeah,
They're
but
not
won't they be forced
be
to, though, sooner or later?
uh, they're forced to make their commission off of you and keep your money. That's what they're forced to do. They can't buy precious metals. They can sell you paper assets, but they can't sell you physical metals. So they'll never pivot and say, yeah, put it into that. The one thing I would actually tell people is get your statement and how much you've made in the last year on a percentage basis
Ooh.
and compare that to precious metals and then go to your financial advisor and
Ooh.
say, okay, here's the objective data. Tell me where I'm missing something. Because if
Wow.
I'm only making 10%, but I could have made 100+% in precious metals, why is it a bad idea? And
Woo.
they stumble and fall, and that's how they do it. I've been dealing with this since the beginning. In the last couple of weeks, it's gotten worse because the financial advisors are being these gatekeepers, and they don't want to lose commission.
So, as the system is set up in their world right now, they can't, other than just advise you verbally, but they're not going to do that because it's going to pivot away from them. So, you're saying that they cannot sell you precious metals
No,
and silver. So,
no.
so, so if you bring them the numbers that you just said, and you bring them the profits, and you say, "Why is this a bad idea?" and they try to snake oil salesman themselves out of that conversation, what does it tell the client?
Well, a lot of these clients that I found out have had a financial advisor for 20 plus years, and gold and silver have really skyrocketed. So to a point where they've even had these people over for Thanksgiving, these financial advisors to become like family friends.
Yeah,
I trust my financial advisor, I've had him 20 years and this and that, and now you're coming on board and telling me to not listen to him. So I say, okay, don't listen to me, listen to the data and put that in front of them and tell me what they say. Is it a flash in the pan? Not really.
yeah. And it also might tell you if you want to keep that person around anymore. Because at this point, it's like, look, are you my fan? It doesn't mean that I'm going to get rid of you if I go and invest some into gold and silver. You could still be my financial advisor with other things. But if you can't help me in this realm, then I got to go somewhere else. But if they try to talk you out of it, then that should tell you something. You know what I mean? Especially looking at the numbers.
Well, and I tell people you don't invest everything in gold and silver.
No,
You
definitely
invest a
not.
portion. You
That's right.
invest a part, just like real estate. I
That's
mean,
right.
you invest a portion of it in real estate, stocks, bonds, precious metals. You have diversification. And I won't take somebody's account and say, let's take everything and put in there because then they'll be calling me every 10 minutes saying it dropped a little bit.
Yeah.
I'm like, oh, okay, this is a long-term investment. If you're looking for short-term gains, get something in the stock market that you feel confident in that you want to gamble.
That's exactly right. So, last but not least, we got a couple minutes left. The big picture with the markets repricing structurally, how they're, and I think that's what we've seen definitely over the last week. But just kind of run us through the big picture real quick here before we run out our time here.
Big picture, obviously take a portion of your IRA, 401k, or cash position, invest it in precious metals, do research on the company you're looking at, not just us, but other companies you want to look at. Make sure their reviews are positive, that you don't see anything striking that's going to make you panic down the road.
Mm-hmm.
And we work with people on promotions, the free silver, covering gaps on stocks, whatever else they may have as far as an asset. So we try to work with people, on buybacks as well that they have with other companies that they may have gotten overcharged on. So I would say for the most part, give us a call, set up a free consultation. It costs nothing. If you like what you hear and you like the reviews that we have, we can move a step further.
Yeah. And you guys, you see it at the bottom of your screen. It's 888-308 4202. That's 888-308-4202. They're there right now. If you don't wait, call and have a conversation now. Get that ball rolling, and then you have a next action item after that. Also, goldencrestmetals.com/LFA for Live from America, this network. It lets them know that you watched this show and that you're coming here and you want to talk to them. So it's goldencrestmetals.com/LFA or call 888-308-4202. Rich or somebody there is waiting to talk to you. And I'm telling you, at the very least, you'll have a wonderful conversation and you'll have a little bit more clarity of where you want to go next. And I think you'll make the right choice for yourself and for your family. And that's what Rich and these guys are going to help you do. They're going to help you make the right choice for you, not for them. All right? So, again, goldencrestmetals.com/LFA. For myself, Jeremy Harrell, Rich Jacoby, this is the Crest Report, and we cannot wait to see you next week and bring you more news from the precious metal world. Thank you very, very much, everybody.
Thank you.
Thank you.